the do's and don'ts when you're applying for a mortgage and going through the process from getting your offer accepted to closing. My name is Carrie Haynes with Movement Mortgage. I'm located in Washington State. I am licensed in 4 other states and can help in just about every state throughout the country. So if you need help or have any questions, please reach out. All of my information is below. Subscribe, like, and share with anyone that you think needs to know this information. So what should you do and not do as you're going through the process of either applying for a loan or you have had your offer accepted and you're going through the contract to close portion of the loan? So the first thing we're gonna wanna do is you need to maintain a steady income. I hear people talk a lot about credit score, how credit score is the most important. I know for a fact from seeing people's loan files that steady income is the most important thing we can do. So credit scores, we can work on those. Income, yes, you can work on income, but it takes time. You're not gonna, it's not gonna be as rapid of a increase as working on your credit score. So steady employment history and making as much income as possible is the number one thing you can do. And then you do still want to maintain a good credit score. So on average, a really good credit score, to me, if someone says they have anything over 740, I'm really pleased. 775 or higher is going to get you the most favorable interest rate. If we get below 600, it doesn't, things can get a little tricky. So the lowest credit score for what I have available as far as my loan programs would be at 580. So maintaining a good credit score and working on that is key. If you don't have a great credit score, there are a ton of ways to increase that. I have people that I work with that can help you increase your credit score and help guide you to, pay off debt and, just different little things you can do to get boosts in your overall credit score. Now, the other thing is saving for a down payment. Do you need 20% down? No, that's like so old news. Is it nice to have 20% if it's available? Yeah, because then you're not paying mortgage insurance unless you have an FHA loan, which always has mortgage insurance. But do you need it? No. Again, income is the most important. So I've had people that have purchased a home with about $5,000 or less in their bank account. So we have multiple options here in Washington State. Movement Mortgage has our own option called Movement Boost. So what those options for down payment assistance do is they give you a percentage of the overall purchase price to use for your down payment and then for your closing costs as well. So it's a really great way to get your foot in the door and start investing and building wealth without having to sit around and wait for that 20% down. Some people could save their entire life and never reach 20% down. So you do not need the 20% down. The more you have, the better, it definitely helps, but don't let that scare you away from at least starting the process. Want to make sure that you are working with a good lender. So don't just pick the first lender you find online. I like to think of those as like a factory. So you're gonna start with one person that's gonna be like the salesperson, the front end, and they are gonna give you, they're gonna show you all the best interest rates and this is how much you can qualify for. And then as you go through it, you're going to get passed along. So any good real estate agent knows that a lot of the online lenders can be horrific to work with. You can't get a hold of them. There's no personal service. You don't know what's going on. Sometimes the loan file will get passed multiple times to different people. So when you're working with myself and my team, you're with us the entire time. So you start with me, we go through your pre-qualification, and then we go through your pre-approval. So your pre-approval, you'll be working with myself and my assistant. So as we work through that, you've got both of us as a resource. I'm still available all the way through the process. Once you have had an offer accepted and you're going from contract all the way to closing, we then bring in a processor. So the processor is going to help us gather all the documentation and package up your loan file and then submit that to the underwriter. So through those processes, I'm always there. I am from the beginning, well beyond closing. Years down the road, you're gonna hear from me. I'm gonna make sure you know what equity you have in your home. If you obtain debt and you need to do a cash out, refinance to pay off some of that debt, any way to help you have that financial stability well beyond closing, I will be there. So really shopping around and making sure, get suggestions. Ask your friends who they used, because if their experience was horrible, they're gonna remember it. Unless the loan officer was, even if a loan officer is really good, unless they're staying in contact, sometimes the people don't remember, but if it's a good loan officer, your friends are going to remember because they're staying in contact with them. They were wonderful throughout the process. So ask people or give me a call. I would love to, at least have an option to have a conversation with you and walk you through some of the process. So, one thing you can do before we even get started is gathering documents. So we'll need, depending on what kind of loan program you're using, pay stubs. We'll need 2 months of pay stubs. Sometimes we'll need tax returns. We need to see where all your money is going to come from for the closing table. So asset statements, bank statements, whether, your money is sitting in an investment account. So kind of gathering some of those can be a little helpful for you as we go through the pre-approval process, because you're not feeling the overwhelm of all the documentation. So that's a great way. That is definitely something you can do to help yourself just kind of ease through some of the pre-approval and then contract to close process. Now, there are quite a few things that you should not do. So when you are under contract, we don't want you to make any large purchases. So we typically review your credit before we issue your pre-approval. Your credit is going to be pulled again before we close. So the underwriter is the one that's going to assess your loan file and give it the stamp of approval. They look in all the loan guides, make sure that your file fits those loan guides and can be approved. They are going to review your credit one more time before closing. No major purchases on your credit cards to severely increase balances unless you have the funds. Do not co-sign on a loan. Don't open any new credit, because when you're opening new credit, sometimes that can decrease your score for a short period of time because you're doing a hard credit pull. It's not a massive decrease, but if it decreases you to a lower bracket as far as what interest rate you get, that can impact your interest rate. I have had that happen before. You want to ask a lot of questions. Make sure that you're asking questions. Don't feel afraid to ask us if you're not understanding. Changing jobs. Is it possible to change jobs in the middle of a transaction? Yes. Is it ideal? Absolutely not. There's so many variables. It has to be the most perfect, seamless transition, and that does not happen very often. So if you're looking for a new job, hang on to your job until after closing, and then you can start shopping around. I've heard horror stories of people that were looking and their employer found out and they got fired or let go before their home closed, and then it kind of, the deal falls apart. Don't be spending any of your money that you're going to be using for closing. So you want to make sure that you're saving that. Don't go make big purchases. Like, I think people get really excited and they start making these purchases and they're either using the funds for closing or they're putting it on their credit card. It can make a huge difference. Don't get a car loan. Don't go buy furniture. Those are the biggest things. Don't change your job. Don't add new debt, and don't spend the money you need to bring to the closing table. So there's a lot of things to do and not to do throughout the loan process. So you need to make sure that you have someone that can guide you, because there are so many variables of things that can go right and things that can go wrong. So I, of course, would love to be a resource. If you have any questions or you would like to do a pre-qualification call or get pre-approved, you can follow all the links below And if you just have a quick question, send me a text, send me an email, or give me a call. I am here to be a resource.